Cool. All right. Hello, everybody. I'm Jeff Gibby. I'm going to go ahead and start with a little bit of a legal disclaimer. I hope everybody's doing well. If you have questions, type them in the chat. I'm very happy to answer any questions. If you have symbols you'd like to look at, go ahead and kind of type them in the chat. Today, we have a bit of a class that we're going to do that's going to talk about Ichimoku Kinko Hui and that indicator. So it's one of my favorite classes. Let's go ahead and get started. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So there you go. I'm going to tell you who I am very quickly. I'm going to tell you a little bit about Metastock, and then we're going to talk. I want to teach a very specific methodology today. I do have a goal. I want you to try out our Metastock software. I do have two goals for today's class. Very, very simply, I hope you learn something. I'm going to teach you a very, very common methodology in trading. It was developed by a guy by the name of Goichi Hasada. It's been very, very popular. He developed it in the 1930s, released it like in the 1950s or 60s. I better look at my notes and give proper dates, but it's just a very popular methodology. I'm going to kind of walk you through how it works as a methodology to trade. So I do represent Metastock. They give me this shirt. And we're just going to talk a little bit about Metastock. Metastock's a really big toolbox. We've been making it here. I've been here like next year. I'll have been here for 30 years, if you can believe that. Um, but it's a toolbox. It's been rated number one in its price category for 31 years in a row. I actually think it's 32 right now, but it helps you with a number of different ways. It can help you scan and identify stocks. It'll help you trade. It can test trading ideas to help you understand, which ones work best in the market. It can help you do market forecasting with a patented forecaster that we have. There's a lot of really, really cool things that are in Metastock, and I think that's why it's been rated number one in its price category. I just ran a scan a few minutes ago, found a couple of stocks I wanted to buy, went ahead and bought them. Um, it's a very, very valuable tool that I wouldn't be able to trade without. And we'll talk a little bit as we go because we were mostly going to show off it while we teach how to use Ichimoku. But there you go. The other thing that I'm really, really proud of is it's 32 years in a row. It's been rated the best software in its price category. Every year, Stocks and Commodities, the magazine called Technical Analysis of Stocks and Commodities magazine, they do a vote, if you would. And they have their readers vote on the software they like the best. And for 32 years in a row, we've been rated the best in our price category. So that's enough for me in terms of bragging what Metastock is. Like I said, there's two goals that I have. One, I want you to get interested in Metastock to do a very, very low risk trial. I'll tell you about that at the end. Two, I want to teach you something. So this is the only picture I could find of the gentleman named Goichi Hasada. He was also called Ichimoku Sanjin, which is what he called himself. He was a journalist, and Ichimoku Sanjin, if you wanted to translate that, could be roughly translated to what a man in the mountain sees. So I do have a couple of notes in here, and so I'm going to go to the notes just so I get dates right and numbers right and things like that. But it the Ichimoku method I'm going to talk about was developed by Goichi Hasada, this gentleman right here, in the late 1930s. He's a Japanese journalist. He also went by Ichimoku Sanjin as a pen name. And again, it can be translated to what a man in the mountain sees. He spent about 30 years perfecting the Ichimoku method and released his findings to the general public in the late 1960s. It's one of the most popular methodologies out there. I know a lot of people that say, okay, here's what the Ichimoku cloud is. They teach how to use it, they trade it. It's a very, very well-respected and trusted indicator. So we're going to go through, well, actually, it's actually a collection of indicators, quite a number of indicators, if you would. So Ichimoku Kinko Hui is a full name of this collection of indicators and the chart setup that we're going to look at. And that can translate to one glance at an equilibrium chart or an instant look at the balance chart. It also can be called the one glance cloud chart based on the unique clouds that are in there. So that's all I need the notes for. I'm going to go ahead and go back into the slideshow here, and we'll kind of just play with a little bit with it. While I'm talking, though, I do have a chart ready, but if you want to look at some charts, I would love to see symbols. We could kind of take a look. I'm happy to teach on your signals. I'm happy to teach them on my signals. Whatever works. So if you have a symbol, just type it into the chat. I should be able to see it, and we'll kind of go through it with your symbols or mine, depending on if you want to see something. So let's go ahead and get started. GLD, okay, you got it. GLD is an interesting one right now, right? Okay, so Ichimoku um, has a number of uses. We're going to kind of walk through them all. It can give you buy and sell indications. It can kind of give you exact points to buy. There's actually two ways that it gives buy and sells. There's a whole bunch of ways that it can help you determine if a stock is bullish or bearish, and there's a number of different things that you can look at there. The cloud in particular is designed to give you resistance and support now and into the future. Also, the current and expected trend is a big part of what the cloud reads. It can help you anticipate the future prices. There's indicators in there that help you determine the stability of the trend and stops and potential reversals. We're going to cover all of that. So, and we're going to go through them one at a time. And Q, okay, Fernandez, thank you. E. Glansman, thank you for the symbol. Okay. I think the best way to talk about this is to kind of talk about the indicators that go in it. And here is kind of the list of the indicators. And you'll notice that when I had Google AI put this together, they put close on there twice. So I was like, whatever. The indicators that we're going to talk about are going to be the Tenkan-sen, the Kijun-sen, the Chiku-span A, the Chiku-span B, or I actually has Chiku-span on there twice too. The Chiku-span, the Senku-span A, and the Senku-span B, which make up the cloud, and then the close. So, and we're just going to start at the very top of it. We'll talk about the Tenkan-sen and the Kijun-sen first, and kind of what they are and how they're calculated and kind of what you use them for. So, let's start there. If I wanted to tell you how to calculate a Tenkan-sen, I'd say go back 9 bars, 9 bars, and find the highest high value and the lowest low value in those 9 values. So the highest high of 9 bars, the lowest low of 9 bars. What you do then is you'll add those two values together and divide them by 2, and that'll give you basically the Tenkan-sen, which is in this illustration right here, the purple line. Okay, the red line is called the Kijun-sen, and the way that you calculate that, it's the same calculation, but you look at the 26-bar high, the 26-bar low, you'd add those two values together and you divide it by 2. And I think it's important that you understand that. And the way I kind of like to talk a little bit about how to use these as indicators is it's kind of like comparing a shorter term moving average and a longer term moving average. I want to say, I always say that, and people are like, it's not a moving average. And it isn't. It's a midpoint. But what you're looking at is a short-term midpoint versus a longer-term midpoint. And a lot of the same rules that you learn about moving averages can be applied to these midpoints as well, the Tenkan-sen and the Kijun-sen. And what I mean by that specifically is if you're in an uptrend, like this stock is obviously very much in an uptrend. It starts over here and it ends up over here. If you're in an uptrend, for the most part, your Tenkan-sen is going to be above your Kijun-sen, just like a shorter term moving average would be above a longer term moving average. And the second thing that's important about the Tenkan-sen and the Kijun-sen when it comes to the Ichimoku method in particular is when the Tenkan-sen crosses the Kijun-sen. So right here, I always point it and it tries to give up the thing. When the Tenkan-sen comes up above the Kijun-sen, that's bullish. That's actually the secondary buy signal. We're going to start with the secondary. It's not the primary buy signal for the Ichimoku method. It's the secondary. So you had a little bit of a crossover here. That would have been a buy signal. And then it's been up above pretty much the whole time, except for when it came down here. And then the Tenkan-sen crossed down below the Kijun-sen and gave you a secondary sell signal. Again, secondary, it's not the primary, it's the secondary. Okay. let's look at this and just kind of talk a little bit about it on gold. So I'm going to go ahead and jump into the Metastock chart. And what I'm going to do is I'm going to just type in GLD. Actually, I have GLD open over here. I was interested in kind of what it looked like earlier. We'll just talk about what the Tenkan-sen and the Kijun-sen are doing. And we'll actually kind of play this. And Fernandez, because you said the NQ, we'll look at that too. We should have like a little bit of time. Except for it looks like looks like I need to go online real quick. So apparently I don't have data right this second, so I'm going to go online. That happens sometimes if I leave the room and I go back to my desk and work for a little bit, I'll have to go back online. So let's go ahead and go back online. We're online. We should be able to get data now. I'm going to refresh the chart and we'll let that gold data come in. Okay. We're going to talk about all of these indicators. We're going to talk about the cloud here. We're going to talk about all of them. Okay. But for right now, just looking at the rules between the Tenkan-sen and the Kijun-sen, which again is this line and this line. If we were kind of looking, I'm going to zoom in at a couple points of this chart here. Okay. Okay. So right here, you see where the Tenkan-sen came up above the Kijun-sen and started trading above it. That again was a secondary buy signal. Okay. It's been above, the Tenkan-sen's been above the Kijun-sen pretty much like this whole meteoric rise that we've had above gold. It came back down and gave us a secondary sell signal right here. But then over here where it started that second leg up, you can see that we got a Tenkan-sen Kijun-sen cross, give us a buy signal. And ever since then, we've had a bullish period. Okay. So that's how we can use it. If we're looking at gold right now, just looking at the Tenkan-sen and Kijun-sen, our Tenkan-sen is above our Kijun-sen, so that's bullish. And in addition to that, our last cross that we had was way back here in November, right around Thanksgiving, where we had a bullish cross. Okay. Obviously, we had a bit of a shakeout on gold on Friday. Big, huge gold silver shakeout. But we're still a little bit bullish here. Okay. Let's go back and we'll talk. So if we're just kind of looking at the indicators, our Tenkan-sen, our last signal out of the Tenkan-sen Kijun-sen was way back here where it was bullish. We're still bullish because our Tenkan-sen is way above our Kijun-sen. Okay, let's go back in here. Let's talk about some more of the rest of the indicators. Okay. Wait. Okay. And then oh, wait. I'm ahead of myself. To sum up what we're doing with the Tenkan-sen and the Kijun-sen, if our Tenkan-sen's above our Kijun-sen, that's bullish. It's bearish if the Tenkan-sen is below the Kijun-sen. And when they cross, it's either a bullish opportunity or a bearish opportunity. It's a primary, or actually, I should say a secondary buy signal. So, don't see any questions. Let's talk about the Kumo, which has a huge play into this. So, the Kumo is made up of two indicators. It's the Senkou span A and down here, the Senkou span B. Okay. If I wanted to tell you how to calculate the Senkou span A, what I do is say I'd take the Tenkan-sen here and plus add the Kijun-sen, add those values together, divide that by 2, but then also plot that 26 bars into the future over here. That would give you your Senkou span A reading. Okay. The Senkou span B, this lower bar, is the highest high value for 52 days, the lowest low day value for 52 days, divided by 2. So it's the same calculation as the Tenkan-sen and the Kijun-sen, but 52 bars, the slowest of all of them. You take those together, add them up, you divide them by 2, and then you plot that 26 bars into the future. And there's a whole bunch of ways that you kind of read those indicators and how they're correlated and how they're put together. And so I'm going to be very careful in terms of trying not to miss anything. Common uses for the Kumo. The Kumo means cloud. So if anybody says Kumo cloud, they're saying cloud, and you should tease them. But the common uses for the Kumo are, one, if the Senku span A is above the Senku span B, you'll notice that the cloud is going to be filled in green in this case. Okay. In a lot of software programs, you can actually customize the colors. The default colors for the cloud is green in Metastock. So if you have a green cloud, that's a bullish sign. It means your Senku span is above your Senku span B. Okay. If your Senku span B is down, A is below the Senku span B, it's going to be a red cloud, and that's bearish. Okay. So you get another indication of bullish or bearish bias by looking at the cloud. If we look into the future, right now it's green here, but if we look over here into the future, it's red. And that when it goes from bullish to bearish, that's called a Kumo twist. And when it goes from bullish to bearish, it's also called a Kumo twist. But depending on whether you're going from green to red, that would be bearish. But if you're going from red to green, that would be bullish. Okay, so there's Kumo twist. There's also the color of the cloud. There's also the relationship of price to the cloud. Okay. If we're trading up above the cloud, if our prices are up here below the cloud, we would consider that bullish. Okay. The primary buy signal for the Ichimoku method is when price comes from down below or within the cloud and closes above the cloud. That's your primary buy signal. Okay. When we talked about the other buy signal, that was a secondary buy signal that came from the Tenkan-San Kijun cross. Okay. We also, so there's a lot of things that we're talking about here, and I'm going to kind of show you how you can kind of keep track of this. We also treat the Kumo as an indication of trend. So if the Kumo's headed up now, that would be bullish. If it's headed up in the future, that would be bullish. If it's headed down, that's bearish. If it's headed down in the future, that's bearish. So those are two more readings that we can look at. If I'm looking at the Kumo at this very hard end of the chart, what I'm seeing here is kind of more of a flattening of the cloud, which is kind of telling me that this instrument is going into a more neutral phase. Does that make sense for everybody? Yeah. Okay. There's a lot here. And the reason I like this is it's not like really complicated stuff, but it is important but there is kind of a few things. If we get in the cloud, we treat the cloud as support and resistance. So right here where we kind of come into the cloud, we expect this cloud to hold. Okay. We expect this to act as a support level. We expect the price to hold. It doesn't always hold because if we came down here below the cloud, that would be a primary sell signal. I know it's a lot to keep in mind. I think I covered all of them. There's a lot of stuff that has to do with the cloud. And I'm going to kind of go to the next slide here and just talk a little bit about the trend bias, the relationship to Kumo. The Kumo acts as support and resistance. The direction of the Kumo is important. The future direction of the Kumo is important. And those Kumo twists are important. So those are all the things that you kind of need to pay attention to when you're trading with the Ichimoku method. It's a one chart at a glance equilibrium type method. Okay. Now I'm going to go ahead and go into gold here. We'll just talk about what we're seeing here. And I'm going to try and remember all of the criteria, but then I'll also show you how to kind of remember or how the software can kind of help us kind of keep tally of the score. Okay. So way back here in gold, um, way back here, I guess this was August 25th of 2025. We've had an historic rally in gold and a historic collapse of gold as well, which is always nice to see on the same chart, right? But back here in 825, we were trading within the cloud. We popped up above the cloud and started trading above the cloud. And that's where we would have gotten our primary buy signal as soon as that closes above the cloud. It's been bullish ever since. It's been up above that cloud ever since. And a good rule of thumb is we're only going to trade in the direction of the cloud. So if we're up above the cloud, we're going to look for bullish positions only. We're going to ignore any bearish positions that come along the way because we want to trade in conjunction with the overall trend. So right here, we closed above the cloud. A couple of days later, we had that Tenkan-San cross. And during that time, it's been August 26th is when it kind of came in and gave us that signal. it's February 2nd today. I don't know. I didn't look at the bar for that, but that whole time it's been bullish. So in other words, where we've had this meteoric rise in gold, we would have only been looking to take long positions the whole time. Okay. All right. Other things that we want to pay attention to the cloud, we treat the cloud as support and resistance. So here, when we kind of got to the cloud again, you'll notice that it kind of settled around the cloud and then started another wave up. We expect this to act as support resistance. It doesn't always, but we expect it to. So if we were looking at gold here and we're looking to get in, we could take a look and say, oh, we're up above the cloud. We're getting a buy signal because our Tenkan came up above our Kijun-sen. That's a secondary buy signal. Overall, it looks pretty bullish if we're looking at the direction of the cloud. We could go ahead and kind of take another entry there. Okay. We also had if we're looking at gold right now, we're still bullish because we've kind of gone up. Um, we're well above the cloud. Okay. We're not seeing a buy sell signal, buy sell opportunity right now, but we are bullish because we're above the cloud. And if we look at the future direction of the cloud, it's also pointing up. Okay. In addition to that, what I want to do, and we don't have any Kuma twist coming up here in the future. So gold may continue to get weaker. Or we may have just had a bit of a shakeout after like a historic run. Time will tell, right? But if I wanted to kind of get a scorecard for everything that we've talked about, I do. Let me go ahead and just click on the View Expert Commentary. This, by the way, was put together by a friend of mine. The whole expert, the signaling, all that kind of stuff was put together by Robert Dedman, and he kind of put it together in such a way that I think kind of helps keep tally, keep score. Okay. So this right here, we call this an expert advisor in Metastock, and by default, it's going to default to the very last day. So it's looking at today. It's looking at gold today. And what it's going to do is it's going to kind of break down these indicators for us for when it comes to the Kumo or the cloud. Okay. What we're getting here, 46 days ago, we had that TK cross. That would have been right here. That would have been when the TK. It was a strong TK signal. You see right here where it says strong TK signal, and it would have been bullish. Okay, we're tallying up where we're at now versus like in the past. And I want to go actually look back at this buy point to see if we looked at the buy point back here, what it would have told us. Okay, if we look at where our price is in relation to ship to our Kumo, our price is here, our Kumo's here. The price is above the cloud. That's also bullish, which it kind of reminds us that that's bullish. Okay. If we look at the current Kumo direction, that's bullish. It's going to remind us that that's bullish. If we look at our future Kumo direction, that's also bullish. Okay. And you see how it's kind of just adding everything up for us. And then it talks about the Chiku span. And I haven't covered the Chiku span yet, but I wanted to be able to make sure that I didn't miss anything. So let's go back and talk about the last two indicators. The last two indicators that are important with the Ichimoku method is the Chiku span and the close price. Okay, the close is pretty self-explanatory. That's where it's at. So let me go back in here and we'll just talk a little bit about the Chiku span here. And then we'll kind of look at some chart examples and that kind of stuff. Okay. This right here, this is the lagging indicator of the Ichimoku method. And all it is it's the close price, but it's put back in time 26 bars. So right here, if we looked at the close, it'll match up exactly with what the close is 26 days ago. The other indicator that's important is the close price. We're looking at kind of the price relative to where it's been. Okay. And we use this in a very, very similar way with the Ichimoku method. One, if we're looking at the Chiku span, again, that's just the 26 bars ago. If our Chiku span is above the cloud, that means the price has been driving up in general. Okay, so when we're looking at the Chiku span, if it's above the cloud, that's bullish, and it gives some trend stability. It says, hey, not only are we going up, the cloud is going up. The Chiku span is above where it was 26 days ago. It's still above the cloud. We're not in a flat area. It lends some stability to the credibility of the bullish trend. That was a lot of words at one point. We also compare it to where the price was 26 days ago. Okay. And if it's above price 26 days ago, it lets stability of the trend. All we're doing is comparing the close to where it was 26 days ago. And if it's above, it means we're still going up, right? Okay. So that's what we use it for. It just kind of gives some credibility to the stability of the trend. And that's all, right? So if I'm kind of the way that we kind of use that as an interpretation method, if our QQ span is above the cloud, that's bullish. If it's down below the cloud, that's bearish. That's we're looking at the relationship of the price to where it was, okay? With regard to the Senkou span, A and B, okay? We also look at it in relationship to the price. Again, if our price is above, if our QQ span is above the price, that's bullish. That means it's still going up. It went up over the last 26 days. If it's down below, that leads a bearish credence to the trend. So there you go. That's really it. That's all of the Ichimoku indicators. Hopefully it was fairly self-explanatory. That's really the whole method that he worked on 30 years ago. That's one of the more popular methods in the marketplace. Now let's look at some examples and see what they were there. So this is all that it's kind of designed to help us do. And I'm going to talk a little bit more about stops as we go because he didn't clearly identify what stops could be. In terms of the methodology, he clearly identified two places where you could buy. That would be the Tenkan-sen, Kijun-sen cross and the cross and close above the cloud. Those are two buy points, the primary and the secondary. But he did not identify exactly where the stop should be. Okay, but we do treat a couple of the indicators as support and resistance. So if we wanted to kind of identify stops, there's some kind of common sense things that we could do. Okay, let's take gold for example. Right here, we've got kind of a bit of a parabolic price move up. We could use one of the things that we could use. I want to call your attention to this triangle right here. We could use the Tenkan-sen as a stop. Okay, that's a stop that could kind of be a tight stop. When we're trading above it, if we ever close below it, we could go ahead and get out of the chart, which would have been Friday for us, right? Another stop area that you can use, remember the Ichimoku, the Kumo of the Ichimoku Kinko Hui indicators is support and resistance. So we could use either the Senkou span A or the Senkou span B. If we ever close down below the cloud, we'd probably definitely want to get down out of the trade because we're going to start to be in a bearish phase. But we could also use this Senkou span A, the top layer of the cloud, as a place to get out of the stock if we start to get down into the cloud. Okay, because if it comes into the cloud, we expect that cloud to hold. We're treating it as support and resistance. If it pops up, it's going to reissue a primary buy signal. In other words, you could always buy back in if you were wrong. Wiseman, Steve Bigelow actually always told me you can always buy back into a stock. You can't just go back 3 days and sell it. So if I'm just looking at silver today, again, this arrow is right here. Like we were talking about earlier, we've had a historic bull move. And we have, on silver, we lost 33% in 1 day, right? We've had a historic crash on gold as well. But the move has been historic enough that we're still fairly bullish on gold. Okay. Our close is still pointed up. We might come into an area where we consolidate. We kind of try and decide what's going to happen between the bulls and the bears, in which case it's going to get a lot closer to where this cloud is. But if we're looking at it today, we've had a bit of a pullback, but we're still really bullish when we look at all of the indicators on the Ichimoku. You've got bullish, 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 bullish. Okay. Everything that you're looking at is bullish. Now, I kind of alluded to the Robert Demmin, the guy that kind of put this together as a methodology. When he was looking to enter a trade, he didn't necessarily want to see it all bullish. He felt like by the time everything got bullish, you'd miss the majority of the move. He'd like to see maybe 4 or 5 things be bullish, but not all 6 of them. I'm going to go back just to where we had the peak here. Okay. And I anticipate we'll still be bullish because it was way higher on Thursday than it was on Friday or even today, right? But what we're going to see here is it's still bullish, but I want to kind of point out the support and resistance values here. So if we use the Kijun-sen as support, that would have been 452.51. When we close down below that, we could have gotten out and kind of taking a nice profit on gold. Okay. If we're waiting for the Senkou span A and Senkou span B, they're way down here, we'd still be holding on. Okay. And I don't have really a recommendation for this. This is just kind of the ways that you can use it. Okay. I also want to kind of break down how this helps you keep track of everything. You do have the scorecard here, right? Bullish, 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 bullish. But if you don't remember what the kind of the conditions are, Robert also put together some really good commentaries to kind of keep everything in order. Okay. So in this particular case right here with gold, I'm just taking a look. Oh, I'm doing really good on time. If I'm looking at this particular example of gold, I can see everything is bullish. But as I come down here in the commentary, it's actually going to break everything down for me. I'm going to kind of zoom this in a little bit here. We're going to kind of go down a little bit, and just that way you can kind of read along with me if you want to. What I want to talk about is like the black part and the blue part. You've got the black part here and the blue part here. The black part is static. It doesn't change. It's basically telling you what that TK signal is looking for. Okay, we know it's bullish because we just looked at the bullishing, but it's going to say, okay, well, the Tinkinson-Kijinsen cross is the predominant signal of the Ichimoku trading system. Similar to a moving average, it uses midpoints, blah, 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 blah. We talked about that, right? This basically just is here to kind of help you remind you of kind of what the methodology does. Okay, if I go down a little bit, it's going to say the latest Tinkinson-Kijinsen signal to occur was a strong signal that occurred 43 bars ago. That would have been right here. Okay. Strong signals usually occur when the price is retracements towards the Kumo and then continue back in alignment with the trend. That's exactly what happened. We had a run up. We had a bit of a consolidation, or what did they call it? A retracement. Actually, I'd call that more of a consolidation than a huge retracement, and then another buy signal. We might see that happen again, but we still haven't had a TK cross to the downside yet. Just this movement was really, really sudden. So it reminds you what's going on, right? It talks about the close in above the cloud. We closed above the Kumo, so that's bullish. Only long signals should be considered when we're above the cloud. We want to trade in the direction of the trend. Somebody told me once that it was your friend. Okay. Current Kumo direction, future Kumo direction, all of this stuff kind of gets laid out and identified for you. Okay. And we're going to kind of just, I think you get the idea. I don't need to kind of, I'm not super good at reading out loud anyway, especially in a webinar. So we'll leave it there for that. If we were looking at gold, maybe we found it on a scan several days ago, or back here 46 days ago, where it had a buy signal. Was it 46 days ago? 43 days ago, we'd get a scorecard. And obviously that's where we'd be kind of really interested in terms of what our bullish bearishness looks. And you'll notice, I'm going to scroll down here, we were bullish, 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 bearish, bullish. So it was a strong signal when it came back in back here, right? When we had that, and again, the reason we had that signal is the Tinkinson crossed above the Kijinsen, the TK cross. That was our secondary signal. But if we were looking at that, we could kind of see it was a fairly bullish buy signal. Okay. Let's go back to this one, though, that happened way back here. And we can kind of get it. Oh, actually, I want to do the sell signal because we'd have a secondary signal here. The Tinkinson cross down below the Kijinsen during this consolidative period. I don't know if that's a word. But if we're looking at that, one, we're not above the cloud, we're not below the cloud, so we shouldn't be considering a short either. But even if we were, maybe we forgot about that. We can see that we're getting a weak bearish signal because of the TK cross. It's a weak signal. Everything else is still bullish, 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 bullish. So there's no way we're going to take a long position there, okay? Or a short position there. A long would maybe be a little bit smarter. And let's look at this last one right here, the one that happened. I guess this would have only been 2 buy signals ago, right? We had 3 signals that came through. This was another buy signal. And when we're looking at that, the scorecard is a little bit different because we are, if we just look at the chart, we are kind of coming in a bit of a more choppy consolidation period here. We had a nice bull run here too, right? Gold's been on a tear lately. But if we're looking at this buy signal, the buy signal that we had was because we had a TK cross. A few bars earlier, I'm just going to kind of zoom in a little bit so you can kind of see it a little closer. few bars earlier, we had a close above the cloud, how it came from in the cloud and then closed above the cloud. That gave us a primary close above the Kumo trade. So within 2 days, we had two buy signals fired out. If we're looking at this one, we have bullish. Our price to Kumo direction is bullish. Current Kumo direction is bullish, while the future is bearish. The Chiku span relationship to price was neutral because we didn't have a steady trend right here. And our periods until the Kumo twist would be 23 bars. So if we were kind of looking at the scorecard then, 1, 2, 3, 4 bullish, 2 bearish, and a neutral. Kind of puts that together. And so maybe when we're looking at this, it's really easy to say in retrospect, well, yeah, you should have bought there. It went straight up afterwards. But we don't know that at the time. And if you kind of are concerned that it's not as bullish as you'd like, as we kind of move along, if you're just watching gold, it didn't take very long. I'd skipped ahead 5 days and everything is looking bullish at that point. So if you're looking for things to get a little bit more bullish before you enter, you can do that. They will be pretty adaptive. I'm kind of wondering where those exactly went all bullish, and it was within 3 bars. So you can wait for some of these things to confirm if you want to. Okay, there you go. I'm looking at the time. I have so much time, which is good. I usually run out. Let's look at the NQs. I'm going to look at that with the QQQ. Okay. All right. So if we're always looking at the hard right edge. So let's go back to the hard right edge. Thank you for the symbol, Fernandez. If we're looking at the keys right now, had a bit of a bearish day today, a bit of a sell-off. Yesterday, we did have that TK cross. We've been kind of in the cloud a little bit. And if we're looking at kind of this from a Dickinson-Keejensen kind of relationship, our TK cross was bullish. We just had a strong bullish signal yesterday. Our relationship to price were above the Kumo, so that's bullish. Current Kumo direction, you notice it's kind of pointed down. That's bearish. Our future is bullish, so. The Chiku span relationship to the Kumo is bullish, but the relationship to price is bearish. And our Kumo twist, our next Kumo twist will be bullish. Or actually, it was bullish. So on the NASDAQ, it's looking pretty bullish if we're looking at kind of all of the indicators put together. It's been in a little bit of a consolidation period here. If we kind of take a look a little bit further back, we crossed above the cloud here. I wonder what this, I'm going to look at what the score was then. You can see when it crossed up above the cloud, it was fairly bullish. And with Ichimoku, it does follow the trend. So there are periods where when the trend starts to kind of evaporate, it gets a little bit choppy. But here we went long. We wouldn't have gone short here. We had another long opportunity here. We had some tests of the cloud. It's held as support. Had some tests of the cloud. It held as support. We had another test here. So far, it's been holding above the cloud. So from a perspective of if we're bullish or bearish on NASDAQ, on a daily basis, looking at the Ichimoku, we're going to be bullish. And not very bullish, so we're starting to see some weakness in kind of the score that's coming in on a daily basis. Okay, cool. All right. I want to show you a couple of other things. I think this expert advisor, I was kind of just doing some competitive analysis, but I think the expert advisor, I was in Google Gemini, and I was just doing kind of preparing some of the understandings about how Metastock compares to some of its biggest competitors. And one thing that I thought was kind of cool was it called the commentary that's in Metastock the crown jewel of the things that are available. And I haven't ever seen anything even like this where it can kind of go in, look at a bar and be very, very specific about what's going in a bar. Which is why when I was talking to Robert and I bought this from him, we include it in every version of Metastock now. It's part of 19, it's part of 20. If you have Metastock, this is just part of it. The reason I like it is Ichimoku is such a popular method, but as long as you understand how to use it, and this does such a great job of helping you understand how to use it. So love that. I love how much detail it goes into to kind of telling you everything that goes on in the chart and how everything works. All that kind of stuff is very, very cool. And I've been using Metastock for 30 years. The other thing that I think is really, really cool, as I'm a stock trader, I like to trade optionable stocks. There's about 6,000 optionable stocks that are out there. And what I want to be able to do as a trader is to identify stocks that have an opportunity now. Okay. I want to be able to find the stocks that are kind of moving right now. I want to be able to ignore, there's a hell of a lot of noise, a heck of a lot of noise. So I'll say the Utah hell word, heck. There's a lot of noise in the market. And what I want to be able to do when I'm trading is focus on the opportunity and ignore those opportunities that don't exist, right? And so, one of my favorite tools is obviously the scanner. It allows me to do just that. I can go in and say, okay, well, based on kind of if you really like Ichimoku, you can do this. You could do it on the MACD. You could do it on any of the 200 plus systems that are built into Metastock. But what I want to do is I want to say, okay, what stocks are out there that are giving a signal today? And in the case of Ichimoku, what is their total score? Okay. And so I ran this already. I didn't want to have to run it in case I was running out of time, which is usually the case. I didn't want to have to run it while we were doing it, but I ran an exploration to see buy and sell signals today. Okay. And just to kind of give you an idea of what I did, the scan that I ran, if you use Metastock, you want to play with this, is called the Ichimoku signals. And I ran it against the NASDAQ 100, the S&P 500, and I think the Dow 30, if I'm not mistaken. Yeah, the Dow 30. So not the whole market. I just wanted to kind of be able to give you an idea of how this worked. And I do a much larger scan over at my desk when I'm scanning for opportunities. But what it took a few minutes to kind of go through, about 3 minutes and 40 seconds to go through, because it went through all of those stocks, looked at the charts and kind of figured out what the score was and gave us all the stocks that had a buy signal, a secondary buy signal, a sell signal, or a secondary signal. So only the stocks that are on this list are going to have, all of them are going to have one of those. Either it's going to be a buy signal, a secondary buy signal, a short signal, or a secondary short signal. Anything that doesn't have one of those conditions is just going to be weeded out. And so as a result of that, we've got 71 stocks out of 445. Again, I just want to focus on the ones that have an opportunity. Okay. Here we've got some different, so Hologenic came up, Norfolk, Union Pacific, Pulta Group, Medtronic. Those are all came up in the stocks. Here we've got a signal category. This is going to have one of 4 numbers on there. It's going to have a 2, which is in the case of Hologenic, that's a TK cross condition. Okay. The secondary buy signal. It might have a 1, like the case of Union Pacific here. That's a primary buy signal. That means if I looked at the chart, yesterday it should be in the cloud or under the cloud, and today it closed above the cloud, going from bearish to bullish, a primary buy signal. Okay. It might have a -1, which means that it went below the cloud today from in the cloud or above the cloud, and it might have a -2. And so I can come here and filter in more. If I just want to look at the proper buy signals or sell signals, maybe I want the primary buy signals, I can kind of just look at the 1s here, right? If on the secondary buy signals, I can just look at the 2. I don't do that. I look at both of them in terms of a long opportunity. But if I wanted to kind of focus in on those, I could. Okay. We also have some columns here. This is called the TK cross. That's your are you bullish on the TK cross condition? Is your Tikusin above the Kijutsu? If so, there will be a 1 here. Is the current Kumo the current Kumo direction, the close is above the Kumo? That's a 1 here. Are you above the Kumo? That's a 1 or a -1 here. Is your future, actually it's the Kumo headed up or down. That's this one. Is your future Kumo headed up or down? What's your Chiku span relationship to the Kumo? It adds up what's your Chiku span relationship to price. So all of those criteria that we're looking at to see if they're bullish or bearish are scored right here on the report. I don't even have to open up the stock. I can just take a look at the report and it's going to tell me what all of these conditions are, and it's going to total it up and give me a score. And like I said, Robert Dedman, the guy that created this, he didn't like to look at the sixes as much. By the time they were a six, he felt like a lot of the move had been done. And you could make that argument with gold simply because we were looking at six when we were really, really peaking out, right? But if I wanted to focus on the fives or the fours, there's two fives here. There's Dr. Horton and Assurant, Dhinaz. Okay. Those would give us a score of 5. The fours we had ETR, Evergreen, Fastenal, General Dynamics, all of these gave us fours. So now if I'm kind of looking at a way to like, okay, let me focus on the stocks that have the best opportunity, instead of looking at like, in this case, 516, I can focus on these two fives and maybe these dozen or so fours, and it allows me to kind of ignore the stocks that I'm not going to buy anyway. And out of these 12 or whatever stocks that are listed here, I can focus on those and figure out which one I want to buy. And I think that's the tool that even after 30 years, I use every day. I run a scan every day. I'll take a look at the stocks. If I like something, I'll buy it at the close. If not, I'll look at it tomorrow and say, hey, did it open positive? Is it kind of moving in the right direction? And then I might buy it then too. But instead of looking at, you're never probably going to look at 516 stocks. Why not focus on the ones that make sense? For me, I almost have to do that because I have a full-time job. I work a lot of hours for Metastock, and I want to be able to focus on the opportunities. And isn't that the point of machines? To help us find the stocks that have a movement? So anyway, that's the Ichimoku in a nutshell. It's also a little bit of a scanning thing. So I hope it was helpful. I hope you learned something, but for Ichimoku, buy and sell indications, bullishness or bearishness in a bunch of different ways, show support and resistance now and into the future, the current trend, the future price direction, the stability of the trend, anticipate those reversals. I want to also emphasize one point right now. This is one methodology in Meta, because I have time. This is one methodology in Metastock out of several hundred. So if I wanted to help you understand what a MACD was, for example, I could go ahead. Let's do it. I have a little bit of time. We want to talk about the classic ways that Gerald Appel talked about the MACD and how to use it. Well, let's just go ahead and change the expert advisor on here. I'm going to go ahead and attach MACD instead. And we won't go really deep into this because I do need to wrap up. But I could show you where MACD buy signals would have come in on a chart, where the sell signals would have come in. I could tell you what was important about the crossover between the MACD and its bullish line, whether it was overbought or oversold. I could look for divergences. So there's several hundred systems in Metastock. You can go in, you can test them, you can see how well does MACD work, how does it compare to the Ichimoku method. The big point that I want to get to is it's not a tool you're going to grow out of. We've been working on this since the 1980s. Over that time period, we've added lots of really cool depth. Meaning, as you grow as a trader, as you kind of test out other ideas, if you want to kind of test out, alternate what you're doing, you have the ability to go in and test and scan for that setup and find it. And I just love it because it's a very inexpensive software platform. I'll talk about price in just a minute. But you're going to invest time into it. And it's as you invest time and money, and not money as much, but as you get better as a trader, as you invest in kind of learning about different methodologies, you're not just buying one methodology. You're buying a toolbox that's going to grow with you and evolve with you as a trader. So let's kind of just talk a little bit. We talked about the expert advisor. We talked about the scanning. I even alluded to the fact that you can test this on whatever stocks that you want to get a result. So I think all of those are kind of the power to us. Those are the reasons that our Metastock users have been with us for decades. I think it works well for what they're doing. Whether it's finding the methodology for you or finding the stock that you want to trade or just even understanding why am I trading this stuff? What does it look like? It's very, very, very helpful for all of those things. So we talked about like the scanning and that kind of stuff. I talked about how for 32 years in a row, it's been rated the best software in its price category. And again, it is a toolbox. It has a scanner. We didn't even open up the forecaster, but it's patented. It allows you to kind of statistically do a lot of understanding about what a price is likely to do based on kind of what it's done statistically in the past. You've got the system tester. Very, very cool toolbox. Um, Let me talk a little bit about pricing and the special offer I've got for you today. And I think that'll give me just enough time to kind of wrap this up. So we do have two versions of Metastock. Both of them are going to update during the day. One of them we call Metastock Real Time. With it, you can go full real time. It also includes a news package that was developed at the cost of over $1 billion. It's supported by the Reuters news infrastructure. They have 3,000 different reporters in like 300 different news bureaus. I did say they spent $1 billion on it, but it includes a institutional grade news feed. It was built out to be a competitor to Bloomberg. If you know anything about Bloomberg, you probably know it's like I think it's a couple $1,000s a month per user. So you get an institutional grade news feed. You get fundamentals. You also get the Ichimoku system as well as like all of the other tools in Metastock to help you scan and test and all that kind of good stuff. And it's just $265 a month. So it's a fraction of what you want to play. If you're not as concerned about the news and getting full real time, you can also look at the Metastock DC version. DC stands for delayed chart. It'll look at daily, weekly, monthly, yearly charts. It's only $75 per month, and it updates on a 15-minute delay. So even though you're looking at daily, you can run your scans during the day and see what's going on. You can also look at your daily charts and see what's going on. The only thing is it's a 15-minute delay. And the other thing is it's $75 a month, and that's it. $75. So it is a full delayed. I talked a lot about the Ichimoku system. We did put in a gap identification system. A gap is a key notification of a change in investor sentiment. And this will give you a gap scanner if you want to trade gaps. It'll give you an expert advisor that explains them and all that kind of stuff. It was brand new to 19. We put in another new trading system that was put together by Michael Murmer, the late Michael Murmer, and very popular. It's a trend following system. We won't talk too much about it. We also include as another bonus, there's so many things that are in here. Jake Bernstein's expansion contraction indicator, a brand new indicator that he put together that does a lot of really cool stuff as well. So it's a huge toolbox. I want to be clear. When we started to talk about Ichimoku, we talked about like a very tiny part of Metastock. It's cool. It helps you, but there's very big stuff in there. Like there's a lot of methodologies. There's a lot of power tools in there, and that's why it's been rated #1. So as part of your subscription, we want to make sure that you're one of our customers that have been with us for decades. So we want it to work well for you. There's a subscription. You can cancel anytime. There's no commitment to keep it going, but we're going to invest in you. Like if you do a subscription, we're going to give you an installation white glove service. We'll have one of our agents talk to you, help you make sure how all the tools work, make sure they answer any questions you've got. We're going to give you access to all of the training materials that we have. We're going to give you unlimited access to our support team. We have our support team right here. They're in our office. There's more people in support than in sales and marketing. And if you ever have any questions, they do a really good job of kind of making sure you understand how it works. So you have unlimited access to them. As long as you're a customer, you can call them. You can chat online with them if you have a question or a technical question. They'll be happy to kind of help you. So the offer that I'm going to do at the event today is a 3-month trial. So if you buy a month, we call it an extended trial. You pay for the first month. You can do it with the real-time version. Again, the pricing on that starts at $210 a month. You can also do it with the delayed chart. It used to be fully end of day, but now it's updates during the day too. It's only $75. If you buy a month, we will give you the second and the third month for free. And this is kind of crazy. If you started that today, you'd have until May 3rd to evaluate the software, play with the systems that are in there, run system tests, talk to our support team, go through the training, and find out for yourself why it's been rated #1 in its price category for 30 years, 32 years in a row. And to just do a little bit of math, that's $25 a month. $75 divided by 3, it's not hard math. $25 per month to try it out for 3 months. And then if you don't like it, there's no commitment. But in the meantime, we'll give you the free support. We'll give you all the help. We'll answer any questions you have. I want it to be as helpful for you as it is for me. I wouldn't trade without it. I want you to be one of our customers that is calling me up and say, "Hey, I've been using Metastock for 5 years," and I'll be like, "Hey, cool. I've been using it for 35." So it's very, very cool. There's a reason it's been rated number one in its price category. So as part of that package, you'll get Metastock 20. You get data for the region of your, well, data, pretty much global data. We cover 300 exchanges. If you're watching us in India, we have the National Stock Exchange of India. If you're watching us in London, we have the London Stock Exchange. With the coverage that we get through basically London Stock Exchange Group, the old Reuters network, we have access to 300 exchanges. We cover stocks and currencies and futures and ETFs and options and foreign exchange, you name it. It is something that we have access to. You'll get that white glove installation. If you have any questions, you can call us 800-882-3040. You can go to metastock.com/sales chat. We'd love to kind of answer questions or send you more information on anything. Or you can just go to metastock.com/LP and then you can sign up there. So that's what I got, Dave. I did get a little bit early in terms of the timing, but we can tell some jokes if you wanted.
Sure. Or
All right. Yeah.
or
Okay.
you have
I'm.
more trade examples you want to show, or
We could go back in and kind of look
um,
at. Let me show you the favorite expert of Metastock. I can do that, and I can spend a couple of minutes doing this. This is why. Yeah. Okay. This is why I loved. I'm going to go back into Metastock. We're going to go back to maybe the got scrolled up here. When I initially started, again, I didn't know what like a stock was or anything. I talked about all the methodologies that are available as part of Metastock. This is one of the ones that I initially kind of really like. If you're familiar with candlesticks, I'm gonna go ahead and just apply this candlestick expert to the chart. Let's do that. I was really hoping to tell you a joke, though. Okay, let's go to candlesticks. I'm gonna attach it. Now with this one, uh, it's based on obviously candlestick patterns. If you're not familiar with candlestick patterns, they were popularized here by Steve Nissan. Also, Greg Morris, or not Greg Morris did a lot of work on candlesticks. Steve Bigelow did a lot of work on candlesticks. They were originally developed in the 1800s by the Japanese rice traders. And what they try to do is kind of give you an insight to the psychology of a chart. And the rice traders weren't wealthy. They were like extremely wealthy. They drove the politics in Japan, and they did a very, very good job. So when I apply this to a chart, it's going to tell us and identify 30-ish different candlestick patterns. Today on gold, we had a rising window. What's a rising window? I'm glad you asked. Let me go ahead and go to the view expert commentary here. Again, we're going to go back into that commentary. It's going to show us right here where we've got the rising window. It's going to say a white body occurred during the past 10 bars. There have been 5 white candles and 5 black candles. It's pretty even. 50 bars, there have been 27 and 23. A rising window occurred where the top of the previous shadow is below the bottom of the current shadow. This implies a continuation of a bullish trend. So if we're just looking at kind of the pattern today, obviously we had a huge sell-off. This is also a bit of, I'd call it a doji, which is indecisive. So with candlesticks, confirmation is important. I'd want to see gold open positive tomorrow. And if it did, you could consider maybe taking a long position. But we do have a rising window on the chart. And there have been 13 rising windows in the last 50 candles, which make it a little bit more bullish. You can see right here where we had a dark cloud, right here at this little peak, and then it pulled back a little bit. We can go in and identify what that pattern means. This indicates prices moved up strongly on a previous bar, opened higher, but then closed lower. This implies weakness as momentum is shifting from the bulls to the bears. So part of the reason I liked Ichimoku Suma, well, I started here. This is one of the first experts I looked at. And again, this is 29 years ago. I started here. I was learning about stocks, and I was like, I applied this expert to a chart. I'm like, oh, look, This is identifying the patterns on the chart. It was then that I understood that Metastack could help you. I'm training a brand new guy right now, and he's like, this is really helpful for people that want to learn about the markets. They can kind of understand kind of these different popular technical methods. And this right here is kind of one of the reasons I think commentary is so helpful. A lot of platforms can just give you buy and sell signals, but you don't understand why you're taking them. Some of them you can't even test the idea to see if it even works worth anything. But there's an example of another expert advisor that I really, really like. So there you go. David, now I'm going to tell you a joke, no matter what.
Okay, go for
Well,
it.
I put this. All right. Are you a fan of Star Wars? I know you are.
Oh yeah. Yeah.
Okay, okay. So here's the joke to end the day. Why did Han Solo not like his steak?
I don't know. Why?
It was chewy. All right.
All
That's
right.
all I got.
That's
Thanks for
that's
having me, Dave.
all right. Yeah. Thank you for being here.
All right. Cool. I'll see myself out.